Cash on cash is the net operating cash flow divided by the initial equity. The difference between cap rate and cash on cash is simply that it's taken into account financing. So we're only taking into account the money we're actually putting down after the loan, and we're receiving less money because we're paying a debt service. So we're still taking into account everything that was indicated with the scheduled income minus vacancy, credit loss, and the expenses to come to the net operating income, but we're also taking into account the financing. So this assumes that you would know the person that was going to buy the property and what kind of loan they would be able to get. Currently, we're looking at the first year. But what is the first year? We're in the APOD, which takes into account just the first month and multiplies it times 12 to make it a year. To be specific, let's click on the Show Monthly. And what happens is it takes just the first month, multiplies it times 12 to come up with the annualized number. So if we did that and go back to the annualized number, that's how we come up with this $65,680. So if there were any changes during the year, for instance, maybe a space goes vacant, then the number between the APOD and the scheduled 12 months will be different. But the APOD only takes into account the first month and says, let's just multiply that times a year. Now, let's click on Exit and go to the income statement. And let's look at the first year monthly. And here we have the net operating cash flow. And you can see it decreases in April 2008. So in the third month. And that's because one of our spaces goes vacant, and we think it's going to be vacant for a number of months. And then we have some changes at the end. And then our net operating cash flow is less than the $68,000. Here it shows $45,000. Now, will this space actually go vacant? Well, we're assuming that, but we don't know. They might stay. So this is which one is more accurate. You don't know. You need to make that choice yourself. Let's now go back to Exit and go to the annual statements, which takes into account the first 12 scheduled months. And here you can see the net operating cash flow matches the number that we saw in the income statement of what was scheduled. And here our cash on cash before tax is lower than what we saw in the APOD, which was 3.6. Now it's 2.52. Also, we show one here called cash on cash after tax. Cash on cash after tax is the net operating cash flow less taxes due. And if we scroll down, you'll see taxes due, divided by the initial equity. And that's how we came up with the cash on cash after tax. Now we're going to exit, and we're going to go to sensitivity. And in sensitivity, you're going to be able to vary things against the cash on cash, which is this ratio. And can vary anything that's going to affect the cash on cash. What's going to affect the cash on cash? Is the cash on cash going to take into account depreciation? No, it doesn't consider that. Is it going to take into account the sale price? No, it doesn't consider that. But it is going to take into account the original price, the loan, and any thing that would affect the net operating income. So let's go ahead and first just vary the price. And when we're varying the price, we're also going to be varying the loan amount at the same time, because it's set to be a percentage of the price. So when we vary the price, click on Run. Here the net operating cash flow is staying the same the whole time. It's not changing that part of the ratio. But we are changing the initial equity. And whenever we're changing the price, we are, in this case, also changing the loan, because the loan was set to be a percentage of the price. If we click Another, we could also vary the loan itself. What if we varied the loan interest rate? How would that affect the cash on cash? Let's change that from 7% to 8% in steps of 0.25. And we run that, and that's changing the net operating cash flow. The NOI is the same, but we're changing the amount of debt service. The amount of the loan would still be the same because we're only varying the interest rate. So that's varying that part of the ratio. If we click Another, now let's vary the vacancy and credit loss on the NOI and see how that affects the cash on cash. And here, we're not changing the debt service, but we are changing the NOI part of the net operating cash flow. And that's, you can see this is just a ratio, and we're just varying different parts of the ratio. Now let's click on Exit. So far we looked at just the first year, but if we go to the Report Income Statement, first we'll look at it before tax. Here we have the cash on cash for each year. In each year, it's only taken into account the current year. It takes the initial equity and the current year net operating cash flow and just does a ratio. It doesn't take into account anything that happened before or after. And it shows us what the cash on cash would be, percentage return for just that 1 year based on your initial equity. It's not taking into account any of the capital spending items, only the net operating cash flow of the current year and the initial equity. This can be a useful number to look at, especially if you have a lot of cash to put into property and you're not planning on selling the property. For instance, you're exchanging in this property, you're not planning to really sell the property, you're just going to keep exchanging, and you want to see that the property is giving you cash flow each year. Well, you can look at this cash on cash before tax column, and you can see the amount of cash flow that's coming off of it. Now if we click on After Tax, let's take a look at that same year. Here we have the net operating cash flow, but then we would subtract from that the taxes due, and then divide that by the initial equity, and that would give us the cash on cash after tax for that 1 year. It's still not taking into account the capital spending. If you want to take into account the capital spending in a cash on cash, look at the adjusted cash on cash measure. Now we're going to click on Exit to the bottom right to come back to the Assumption Edit screen.